Hello again, everyone, and welcome to our latest market report. Dion Zakuski, Branch Manager and Director of Scotia Wealth, back with you again, and we're going to check out the latest happenings in the investment world. I'm not going to chat a lot about COVID. There's more than enough about that out there already. But what we will look at today is what I call the double eyes of inflation and interest rates, the current earnings season and how that's moving markets, and then we're going to have a Zouk Group media update with our associate Rachel. Well, with a strong past few months in the investment world, people now ask, will it continue? Data shows that global economies continue to rebound in a big way from a year ago. We see a lot of continued tailwinds, such as pent-up consumer demand, loads of cash on corporate balance sheets, cheap money from the banks, and so on. But the big boogeyman that's out there is what I call the two eyes, which is inflation and interest rates. Because of the recent surge in global demand and supply chains that aren't back to normal yet, we're seeing inflation become a potential issue. It's pretty obvious, especially in commodities. If you filled up your car lately, you know about this, or if you've been to somewhere like Home Depot to try and buy lumber, you'll know that prices have really gone up lately. So everything from lumber to grain to gasoline has gone up in price. Cost of goods has risen as a result. And we're going to show you a quick chart that explains further. So we're looking at US headline inflation versus manufacturing prices. And if you look to the right-hand side, we see that inflation has gone up dramatically with that blue line going straight up. What's more interesting is manufacturing prices are actually even ahead of that. So typically, headline inflation catches up to that, which could mean prices will move even higher. So the concern then becomes interest rates. Simply put, if inflation runs too high for too long, then central banks have to raise interest rates to cool off the economy a bit. This would be a negative for investment markets. But for now, the good news is that both the US Federal Reserve and the Bank of Canada has stated they're going to leave interest rates alone. The theory is that the cure for high prices may just simply be high prices, and that the economy will naturally ease off when supply and demand eventually normalize. Time will tell, of course, but if rates continue to stay low, the juice keeps flowing, and we expect markets to continue along with that. So the other factor that's pushing equity markets higher is a strong start to the latest earnings season. Many of the world's largest companies have reported stellar earnings that are in line with the global recovery. Our partners at the Global Portfolio Advisory Group are tracking that 9 out of the 11 major sectors are on pace for better than expected gains. When we look at earnings performance over the last number of quarters, this chart goes back over 7 years, we can see that earnings are expected to rise dramatically over the next few quarters, vastly higher than what they've been a few years ago. The backdrop for markets remains positive, and the old sell in May and go away mantra is probably not going to happen this year. However, we know that just like many things in life, things don't always go up in straight lines, and that's why it's important to still maintain some level of balance or defense like fixed income in the portfolios. But any minor equity market corrections should prove as an opportunity over the next little while. Next, we have some exciting media updates from the Zouk Group, and to tell us more about that, here's our associate, Rachel.
Hey everyone, a quick update on our media pages for you. We have updated our website, zoukgroup.com, and we are launching our Facebook page this week. So if you're on Facebook, go ahead and go to your search bar and look up the Zakuski Group, and please give us a like. We will be posting everything from wealth planning to the markets to lifestyle, and it'll also loop you back to our new revamped website at zoukgroup.com. We have actually posted all new materials on there and different ways to contact us. And that is our video for today. So stay safe, and we will see you again soon. Thank you.